I know, the title sounds a bit extreme. Dumbest thing to do, which is to sell and wait for market crash to enter. It's actually very ideal a situation, and maybe you have thought of it before, but today I'd like to address to you why you should exactly avoid this. Later I'll share with you 2 ideas as to why it's very difficult to do so. And last but not least, I'll end this video by sharing with you when you should consider selling and when you should consider buying even though markets are at all-time high. Now, all these concerns have ran through your mind before. Markets are all-time high. Valuations are very expensive. Stock markets is went up for the last 10 years. Surely there's going to be a big crash, correct, sooner or later. Or maybe there's a recession round the corner. Inflation is down the road. There's a lot of concerns now that inflation would hurt growth stocks. Yada. These are noises. When markets go up, they climb a wall of worry, which means at every juncture of it being a new high, there's always concerns that there's a crash waiting to be happening. If you look around social media, you also see experts suggesting that markets are frothy, which is something I also believe in. Charlie Munger has also mentioned that right now, market, there seems to be a lot of excesses, a lot of gambling, a lot of leveraging. Michael Burry has also mentioned before that market is dancing on a knife's edge because a lot of investors are taking unsupported risk. If you look at Ray Dalio, he's also warned of market bubbles. So what about famous investor Jim Rogers? Of course, he's going to say the mother of all crashes is just round the corner because every year he's just saying market crash, market crash, market crash, as you can see in this summary table over here. So all these experts, they are all sounding the warning bell that markets are not cheap. And indeed, that is why you should never go all in as of this moment, because when markets are expensive, there's bound to be periods whereby they underperform. Before we move further, I also like to share with you this previous information that I've seen before. This is actually a summary of how much cash is in your stock portfolio. For myself, I'm around the 20% range. I don't know about you, leave in the comment sections below. I'll be keen to hear from you. But I'd like to address the first key part, which I also don't like, which is if you're now on margin, you're already 100% in and on margin, be very careful. That means that you could be over greedy. But also on the other hand, I also want to address the 14% that has 60 to 80% in cash. They could be also waiting for the market to crash before hopefully re-entering the market, which I'll try to dispel. So my stance is very clear. You should have some cash, but not on the extreme ends. Not when you have too much cash and not when you're already on margin, because that puts you at a very unfavorable position. Now, the first key point which I'd like to try to prove to you why selling out and waiting for a market crash is difficult is this. If you sell out today, do you realize that you may not be able to buy in at today's price ever again? Sounds very scary, correct? Which means if you sell, it's gone. This level of price is no longer going to be seen forever. Maybe it's true, maybe it's not true, but let me run through with you a situation. Take for example, in 2019-2020, when S&P 500 was at 3,000 a level, you kind of sold out of the market. You were thinking maybe there's a crash going to happen, and you're actually true. You're actually correct. Market crashed because of COVID-19 fears, correct? Market came down from 3,002 thereabouts on S&P 500 all the way to 2,304, as you can see in this image over here. Fantastic, you got the timing almost perfect. You sold out at 3,000 and right now the market is looking at 2,300. But therein lies the problem. What if you mistime the buy-in? You were thinking maybe it could go down even lower. Maybe you're hoping for a better price. And then what happens? The market shoots up, correct? It rebounded on and on. Markets were beyond all expectations, looking more rosy than ever. And what happens? Fast forward to 1 year plus, now markets are at 4,233. Do you realize what happened? You got the timing right selling at 3,000, and yet when you seemingly benefited the market crash, but you didn't participate, you didn't get the entry leg in again, markets rallied, and then from now on, you are never going to see 3,000 again. Actually, what needs to happen for you to get back to 3,000? The market needs to come down by 30% again, from 4,233 all the way down 30% before you reach 3,000. Which means again, if you sell out today, you may never see this price. I don't know if it's trying to overscare you or not, but let it be a food for thought. If you sell out today, you may never get it back at this price. Second proof of why you should never sell out entirely and wait for market crash again is this. This chart is very powerful. What do you realize? If we exclude 2020, you see that drawdowns actually happen every single year, correct? 2019, it was 6.8%. 2018, it was 19.8%, a bit heavier. But 2017, only 2.8%, and 2016, 10.5%. Now, what do you realize? Most of these drawdowns are quite shallow, correct? 10% average, 12% average, which means most of the market drawdowns are quite shallow and they rebound pretty quickly. You selling out and waiting for a big crash may not happen in many years. It happens very occasionally. Most years it's a correction, 10+% correction at most, and it rebounds very quickly, which means the timing part is very difficult to achieve. So keep that in mind. Markets have corrections every year, and if you're looking to sell and wait for correction, you could mistime it. What if you had just decided to ride out the pain? This 10% you see it on your portfolio, never mind. You wait for a few months and you're actually back to square one. So take that thought and think very carefully before you start selling out the next time. So having said all these 2 key points, let me give you something constructive which you can bring off from today. When should you exactly sell from the market? Now, different people have different contexts. That's why I would like to suggest in 2 different extreme situations so that you can consider for yourself. Take, for example, the first situation. If you have 500,000 total assets, 300,000 in cash, 200,000 invested, should you really be selling even though markets are very high now? Probably not, because you could mistime things. You should instead be waiting for opportunities to deploy more or start deploying slowly. You already have 300,000 in cash, which means you are 60% in cash. And cash, as we know, is being inflated away. Cash is not a good asset to hold too much of it right now. But if you're at the phase where you're thinking, hey, I don't have 500,000, I'm looking to build up my capital, and my job doesn't give me that, then very simply, you should look to build side hustles and side projects that can help you with your income. And that's where I introduced today's sponsor, Skillshare. Within Skillshare, you'll find courses on entrepreneurship and on branding. Someone I follow very closely, Gary Vaynerchuk, is also on Skillshare, so go and check it out. He has a 1.5 hour masterclass. Look for links below. I encourage you to explore and look what you can learn from there. Learn more on Skillshare. The first 1,000 to click the link in the description below will get a free trial of the Skillshare premium membership. Then second extreme situation, you have 200,000 invested and your remaining cash is only 30,000 instead of 300,000. Do you realize what has happened? You're almost all into the market, correct? You're only left with 5-6% in cash. That puts you at a very unfavorable position. In any case, that 30,000 cash could also be your emergency cash which you cannot deploy in the market. What does that mean? That means you should consider actually selling out from your portfolio. Maybe you have invested too aggressively already. Good, now markets are high, you probably had agreed. You should consider selling out and relook at your overall strategy. And all this starts when you do a proper financial review on your own self. You need to know how much assets you've invested. You know how much cash you have lying all over the place. A full financial review will review exactly your investment strategy. So hopefully that gives you some food for thought. In any case, if you're keen to look for my advice, look for the one-to-one links, or actually help private clients look through the entire portfolio and give strategic investment suggestions. Now, last but not least, how do you actually do a full net worth review? I've actually this previous video that I've done in this community. I don't know if you've seen that video before. In that video, I actually shared my net worth is at least $1.19 million. And with that, I actually showed, hey, there's cash here, there's properties there. How much cash is lying around? That thing needs to be really addressed. In any case, there are many solutions right now for your cash to be parked to get better interest than leaving it in the bank. But that video really explains how you can do a full review and relook at your net worth. So if you haven't seen that video, let me invite you there. And thank you for watching the video. Smash the like button if you haven't done so. I'll see you in a future video. Take care and goodbye.